Good afternoon, and thank you for joining Camco Invest's online investor meeting today, where we will be discussing the company's performance as of March 31st, 2024. My name is Mohammed Akbar, and I am part of the marketing and investor relations team at Camco Invest. Joining me are our CEO, Mr. Faisal Salkho, and our CFO, Ms. Hana Taha. Our agenda for today will cover a brief introduction on the company, an overview of the events that took place during the period, highlights on the company's business and financial performance, and finally, we will close by answering any raised questions. If you would like to ask any questions during the presentation, please feel free to use the Q&A option, and we will be more than happy to answer them at the end. Okay, so we'll now begin with the company's overview. Camco Invest is an independently managed subsidiary of KIPCO Group and adopts the highest standards of corporate governance while providing a comprehensive range of investment solutions. We are headquartered in Kuwait and licensed by the Capital Markets Authority and Central Bank of Kuwait. Camco Invest is listed on Borsa Kuwait and trades under the ticker Camco. Our primary business offerings include asset management, investment banking, and brokerage services. As for our regional presence, we have licensed offices in the UAE, Saudi Arabia, and London. As of March 31st, 2024, our assets under management reached $15.6 billion, whereas our investment banking mandate since inception reached $36.9 billion. Our strategic approach at Camco Invest has well positioned us to better serve our clients. This approach is comprised of our effective placement power, broadening regional footprints, diversified comprehensive offerings, in-depth market insights, strong track record, multi-industry experienced professionals, and adoption of a customized client-driven approach. We will now move on to the market overview. Before going into market performance, let me give you a brief overview of the current global economic scenario. Global economic growth rate is expected to reach 3.2% in 2024 and 2015, which is lower than historical averages. One of the key reasons is higher borrowing rates that discourage business investment. Moreover, growth is expected to be uneven, with the advanced markets with expectations of growth shrinking in the US, while Eurozone is expected to see improvements. In the GCC, economic growth remains subdued due to the oil output cuts extended by OPEC Plus until mid-year. Oil GDP is forecasted to decline this year by 1.1%, and this decline could steepen if output cuts are extended. On the other hand, non-oil GDP is expected to remain upbeat in the region due to a strong projects market. On the right-hand side, we can see charts highlighting the trend oil prices. The oil market remains under pressure due to mixed economic signals, as well as declining war risk premium. Prices declined during Q1 2024, although geopolitical issues coupled with tighter markets and controlled output led to limited recovery towards the end of the year. In financial markets, global equity indices witnessed gains across the board during Q1 2024, mainly reflecting optimism related to strong corporate earnings performance, especially in the US, resulting in strong gains in large cap tech stocks. The investor sentiments were strong enough to overlook elevated inflation numbers, while in Europe, gradual economic recovery supported gains in the regional indices. Coming to the regional market, GCC equity markets underperformed with almost flattish gains for the MSCI GCC index during the quarter, mainly led by geopolitical issues in the region and seasonal selling pressure during March 2024. The performance of individual markets were mixed, with Kuwait seeing the biggest quarterly gain, while Qatar and Abu Dhabi registered declines. Dividend announcements also affected performance of benchmarks during the quarter. In terms of sectors, insurance was the best performing index during the quarter, while energy reported the biggest decline. Now I will hand it over to our CEO, who will provide you with insights on the key aspects of the business during the quarter.
Good afternoon. Yes, thank you, Mohammed, and good afternoon, everyone. I think before talking a little bit about the performance at a glance, I'd just like to reiterate some of the points raised by my colleague. Today, we know we have a number of multiple risk factors in our markets, in our economic environment. The key ones I just wanted to highlight before going into it is, I mean, we have a sticky inflation and interest rate environment, geopolitical uncertainty that is there. We're seeing some shrinking in consumer spending, volatile capital markets, somewhat of a depressed investment appetite, and one of the key things that impact companies like us, which is the repricing of risk and asset values. So those are issues we're operating in the backdrop of. And nevertheless, I think 2023, as was highlighted and as was mentioned, was a different year. The first quarter had its own dynamics. For Qamco, coming back into the performance, profitable first quarter with a growth level of 7.4% quarter to quarter, last year to this year. Of course, significant change in total income, partially also that in the quarter of 2023, there was a loss that emanated from the market where we are exposed as well. G&A has grown in the numbers, and that's a reflection of the growth of the fee income as well. It's related to it, associated to it. There was an increase in the liability side. It's part of our business model that there will be increases and decreases in the liability side. And the cash position is relatively similar. And I think my colleague, the CFO, will go into more details. But at a glance, these are the key highlights for the quarter. We can go to the next slide. Yes, okay. So let's talk a little bit about what was done in the first quarter. On the asset management side, equities and fixed income. Of course, overall assets under management, or our AUM, and as was highlighted earlier, we are the top in Kuwait and one of the top players in the region. There was a growth of 5.1%, reaching 15.6 in the first quarter. If we look at performance matrices on the equities and fixed income side, I think there is a continuous outperformance of respective benchmarks. Our equity funds on the conventional side were ranked second and third in the first quarter, with KIF coming second and Qamco Premier Market Index Fund coming third. Our Qamco Islamic Fund is in the lead as the best Islamic fund. These are all Kuwait funds. Of course, we have multiple other funds in other jurisdictions as well, but we highlight the ones here. On the alternative investment space, and you'll hear more of alternative investments, in the last quarter of last year, we consolidated our teams in the real estate, private equity, venture capital, all brought together under the alternative investment space, which today manages around $2.2 billion of client money under its management. The team is continuing its efforts on legacy asset exits, whether in the private equity or elsewhere, as well as working on new initiatives in the private equity side. On top of that, a number of investment opportunities in real estate, and I mentioned private equity and venture capital, are being looked at. Some, one of them, or multiple ones actually, in partnership with Santander Asset Management, who are really specialists in private debt instruments. During also the previous period, we're very pleased to have closed the raising for our JEDI fund, and that was after the approvals from Kuwait CMA. On the investment banking side, which is the second pillar of our business, there's a continuity of transactions and pipeline building. In the quarter, a significant event was a successful closing of a regional USD 500 million Sukuk issuance. Several transactions, of course, are expected to close in 2024, but if we talk about the first quarter, that was the biggest one. But we do have multiple transactions on the three key areas under our investment banking, which is the equity capital markets, the debt capital markets, and the mergers and acquisitions teams that we have. On the brokerage side, of course, we continue our efforts through our subsidiary, Ula Wasata, which is our brokerage arm, strengthening our competitive position, attracting new clients, and continuing to develop using our online trading platform. In addition to have launched an app dedicated to onboarding clients and updating client information. So ongoing efforts there on the brokerage side with Ula Wasata. Regional offices, we mentioned earlier on that our core markets, of course, are Kuwait, Saudi Arabia, and UAE. Of course, we have opened an office in London, but the core markets of our main business are in these three jurisdictions. These regional offices continue to strengthen presence. We continue to focus on building the teams there and investing in those businesses because they are contributors to our core businesses, especially on the asset management side. And we're very pleased with the results that are starting or have started to show and are increasingly showing as we ramp up the teams and the abilities in all jurisdictions out of Kuwait, all key jurisdictions, core markets out of Kuwait and Saudi and the UAE. An example recently was Saudi signing an agreement with Flexam to look at leasing opportunities for clients. So some business that is generated from our companies and at the same time collaborating amongst the three for our business model. A quick snapshot. I think this is the final slide before our CFO goes into more details, but a reflection of the growth of the AUM since establishment, standing at a healthy 12.5 CAGR since inception in 1998. So the funnel of growth is always there. Of course, we've had some major events during the period here. We just mentioned two of them, or three of them actually. One is being the financial crisis that hit in 2007-8 and the result of it. Then you have, of course, the acquisition of a majority stake in Global and the merger that happened in 2019. Then, of course, we had the COVID period, but in all these events, I think what's important is that we have continued to grow the business from the early days of 98 until this quarter, continuous growth in client AUM, which is a reflection of course, our efforts and what we offer to our clients and how we are attracting them and growing with them the business. I think with that.
Thank you, Boubader.
Yes, thank you and appreciate it.
Now our CFO will cover the company's financial performance during the period. Hannah,
thank you, Boubader. Yeah. Thank you, Boubader. Good afternoon, everyone. In this slide, more details and analysis about Kamco performance during Q1 2024. Fee income core still remain the core of our income, representing 52% of our total income. Our total income reached, the fee income reached 3.5 million compared to 3.3 million Q1 2023. Total income increased by 155% to reach 6.7 million KD from 2.6 million KD during Q1 2023. And we can look at the investment income. It is increased from loss 779 million KD, 779,000 KD, 3 months 2023 to 1.3 million in Q1 2024. Also, share of result increased from 635,000 loss to 1.1 million for Q1 2024, and this is the main change for Q1 2024. Next slide. General and administrative expenses increased by 14.8%. It reached 4 million KD Q1 2024 from 3.5 million Q1 2023. Net profit increased from, it was lost in Q1 2023, 1.6 million, increased to 1.5 million profit in Q1 2024. Also, the finance cost increased due to increase in borrowing amount and also CBK discount rate. So it is our cost increased from 677,000 KD Q1 2023 to 880,000 KD for Q1 2024. Loss per share, it was 4.57 fils per share, and Q1 2024 became 4.28 fils per share profit in Q1 2024. Next slide. Here the financial positions. Our total asset increased by 11.1%. Cash and cash equivalent represent 19% of our total assets. Investments to total assets represent 67%. Our total asset reached 143 million KD from 129 million KD as of December 2023. Our cash decreased from 26 million to 25 million as of March 2024. Next slide. Total liability increased by 20%. It is increased from 64 million to 77.1 million as of March 2024, and owner's equity stands at 61.5 million KD. It was 59.7 million as of December 2023. And our credit rating by Capital Intelligence as of May 2023, and we need to mention here that last Thursday, 17 May 2024, we maintained the same rating at BBB long term and A3 short term with a stable outlook. Thank you.
Thank you, Hana. We will now be taking any questions. Seems like there are no questions at this time. Boubadir, if you'd like to say a few words.
Thank you, Mohammed. Thank you, Hana. I think we'd just like to reiterate that the environment we operate in is volatile. We hope there will be stability on the inflation and interest rate side globally. Of course, the geopolitics don't seem to be getting much better, so still there's some instability there. Energy prices seem to be relatively stable, taking into incorporation the situation from an economic and the political side. We expect that the days ahead will be better. I mean, the Kuwaiti market hopefully will have better days ahead. The regional markets, of course, continue to grow. So our focus is primarily on the region, and with that, we are cautiously optimistic on the coming quarters. I can say at least this quarter there is an element of optimism there. So we look forward to growing the business and continuing the journey, and see you in the next quarter, hopefully with stronger numbers as we move along. Thank you.
Thank you, Boubadir. With that, we come to the end of our investors meeting for the period ended March 31st, 2024. Thank you all for tuning in. If you have any additional queries, please visit our investor relations section on www.camcoinvest.com or send an email to investors@camcoinvest.com. A copy of the investors presentation will be available under the IR section of our website. Thank you once again, and I hope you enjoy the rest of your day.
Thank you.
Thank you.